Awesome. Okay, I hope you guys are pumped up. Hope you guys are like super excited, super ready to go, dive deep, and just absolutely crush dark pool investing, which is like so exciting. So let's go to the computer. I actually want to break down sort of some of the basics of like where these investment vehicles and these dark pools actually came from, right? So you got to remember like with normal investments, right? Like you've got your bid and you got your ask. And just with like any kind of investment, you have people that want to buy and people that want to sell, right? And I remember like someone was talking to me the other day and they were like, where do stock prices come from? Don't the markets or the exchanges just like arbitrarily set prices? And I'm like, no, dude. I mean, you guys know this. You've been going through 9 to noon. Like it's all about what the market will actually pay for an underlying stock. That's the value of the stock. Now, the thing with like traditional level two and what you guys have been learning with, looking at sort of like where people are buying, where people are selling, and then looking at, if you have like a ton of people that want to buy, and then you have sort of a ton of people that want to sell, and then they kind of meet in the middle. Like this is just your traditional normal market depth. And obviously, once they get met, like this is where you have a transaction that occurs, which is totally cool, totally makes sense, totally normal. And it works for basically everyone on the planet. Except for like institutional traders, institutional investors. Look at people like Goldman Sachs. Look at like these huge Wall Street firms, and they're trading maybe what most people would trade times like times 1,000, right? I mean, they have these huge position sizes, and so like everyone's maybe trading like 1 or 2 or 10 shares of a stock or something, and then they come in, they're like, I want to sell 100,000 shares or something, and it's like so many shares. So that's sort of one side of this coin of where are these investors coming from? Why do people actually need dark pools, and then why are they like a big part of the economy. I mean, you look at some of the statistics around now time, it's like 40, 50% of the actual volume comes from these dark pools, right? Because, you've got this idea that like a lot of people are trading these shares. And so that's sort of one side of it is that like if they were going to put their entire order here, people would see that and they would instantly start selling, right? So they want to get it filled sort of anonymously so they can get all the shares they want sold or all the shares they want bought, and then they can report it over here without actually having to directly tell everybody what they're doing. So just the foundation of basis of why this happens. This happens across all markets. It happens in crypto. I mean, this is nothing new. This is everywhere. And it really is so that those really big investors or those really big firms can actually go and get the best price possible for their entire lot of shares without, spiking up the volume and then making everybody freak out and moving the whole market, because then they would be able to get filled, right? So that's sort of the basis, and that's number one. Number two, which is kind of cool, is the other reason that people will use sort of these dark pools is if you're a market maker. So market makers, right, like they want to buy. I mean, this is what you guys should be doing, right? You should be buying the bid and selling the ask. And what these guys will do is they'll do this like thousands of times a day. And this is why you have people that pay, millions of dollars to own land in the coffee shop next to the NASDAQ so that they can get faster order execution. It's all about this concept of like being able to buy the bid and sell the ask in very quick, repetitive time frames over and over and over again. I mean, this is the basis of like high frequency trading. It's this idea that you want to sell it to people a stock more expensive and you actually buy it and then buy it cheaper, then you sell it to them. And when you're doing that as a market maker, especially with large size, it doesn't like people are going to see, if you're right here and this is you, and then say this is also you, like it's going to look really bad if that's you and that's your financial firm. And so what they'll do is they'll try to sort of mask the fact that this is them. They'll try to sort of hide it. And the way they'll do it is they'll have one of these that just looks like normal, right? One of them is just, this is them, this is their investment, this is their trade. But the other one, they'll do something special, right? They'll route this other one through dark pools, right? And so then it looks like it's coming from a different exchange. It looks like it's coming from a different place. And so because of that, it looks much more natural. And you can have, you can be on the bid and the ask simultaneously, and then you can make the profit on the spread, right? And so that's what you see some of these really big firms. And guys, it's not a lot of money. This is not really a strategic way to make a ton of profit. These guys might make like 0.5%, 1/4%, sometimes even just 1/100% on these investments. They'll make like a penny or maybe 5 pennies on $100 stock. I mean, it's very minimal. But for these guys, they just have like hundreds of millions of dollars to blow. So they're like, why not, And they'll do this over and over and over again. And it's mostly in larger stocks, which is partially why, larger stocks and high float stocks aren't going to move as actively for 9 to noon investing, because you have crap like this going on where people are trying to make money on just bogus arbitrage that, it's anyway. So that's sort of the foundation, sort of the top two reasons why you actually have these very, very active dark pool investment spaces, where people are exchanging really, really, really big blocks of shares, partially because they want to get the price that they want. They don't want to move the whole market. They want to freaking buy or sell without having to freak out everybody. And then the other reason is so that they can actually have sort of different identities, even though they're actually the same person, so that they can make a market, and make profit as a market maker. So those are the two foundational cores of why this is crucial, just sort of the basis of it. What Stephanie does here is pretty cool. She talks about some of the most common like dark pools, and it's not a huge deal. Like, you don't really need to know too much about them. When you're looking at your level two, usually you'll see stuff like NASDAQ, you'll see stuff like NYSE. So just a really, really good thing to know here is, those are just common things that you'll see in the level two. Those are things that you'll see sort of like as you're looking at the block trade indicator, which we'll get to soon. Like as you're looking at investments, you're going to see, prices, right? So you got the price, and then obviously this is, for whatever stock, right? Or stock or an index or whatever. You got the price, the number of shares, which is super, super important, super, super cool. And then sometimes you might have some other information like, the date, or there's just some other stuff. But that's the most important, like the price, the amount of shares. And then obviously, buy or sell if it's on the buy side or the sell side of the level two, right? So buying or selling. But then something else you'll have that's really, really, really critical is where the exchange is, right? So this is where you'll see stuff like NYSE. This is where you see stuff like NASDAQ, right? That'll come across for every single person that's trying to buy or sell. Now, what's crucial here is that there are, basically at the time of this book, like there's like 50 or so dark pools. Because remember, these dark pools are literally just like institutions that are set up sort of as broker dealers to actually, exchange these investments. And so, without going too deep into it, like there are a lot of these sort of alternative trading networks, right? And they're just like separate from, what most people are doing, right? They're separate from the big exchanges. And just some of at least, well, she's been doing this like for years, right? So she's noticed that like the most common exchange symbol for the dark pools is I NCA. And I write about this in I Knew, not a big deal. But this is going to be something that you'll notice over time and you want to look out for is INCA. It stands for the Instinet Dark Pool Exchange. It's pretty much just an anonymous dark pool, not a big deal. And you'll see it sometimes on level 2. You see sometimes when you're scanning through these really, really big trades, you might see stuff from this INCA network. And so that's one of the quick ways that you can tell, okay, this is a dark pool order. Besides the fact that it might have like hundreds of thousands of shares traded, that's a really, really quick dead giveaway about where it's coming from, which is super, super critical, super important. It's like 40. I mean, there's tons of these guys. You might see some other ones like Barclays Liquidity Cross. That's just LX. They don't have, they don't have dollar signs. It just says what they are. And there's also like Goldman Sachs Sigma X. So there's some other things like that. But you really, most of what you're gonna see, the exchange doesn't matter too much. But if you see something like this, like INCA, like that's a dead giveaway. And so a really, really great way to sort of quickly show, hey, this is dark pool. Hey, I should probably watch for this trade. This is something that's been like they have to go out of their way to make these trades in these specific investment vehicles. They have to go out of their way to go to the dark pool. And that's that's a lot of work for them, right? And so if they're doing it, it's got to be for a good reason. Because remember, the benefit of actually doing this is they can delay their trades by up to 3 hours after they report. So first of all, right, like if they want to buy 100,000 or 1,000,000 shares, like they can submit this order and they don't actually have to report this order until every single share is filled. So they can fill, half of these shares in a day and then another half another day. They don't have to report until everything is filled. And at the same time, they get to report on a 3-hour delayed basis, which is total crap. And what's crazy, and she kind of talks about this, if they're kind of living in the States, right? And there's in the US, they send their order overseas all the way over to like Europe. What they can do is they can delay this trade, if they can delay reporting this by 24 hours, which is kind of insane. So they can actually hide what they're doing by sort of hiding their trade by taking it overseas over to, Europe, and then they get to spend like an entire day just hiding their investment so that they can continue to just make trades like these without actually moving the market. and so that they can sell all of it at the top. They can buy everything at the bottom, stuff like that, right? So just sort of some core foundation here as we get into it. You definitely want to make sure that you understand that like this is why people use Darkpool, and then also they get to report to the trade reporting facility later than most people, at least with centralized exchanges right now, which is super screwed up. You got to remember these guys are literally trading almost half the market, and so if they have that much money, if they have that much power, like they can kind of do this. And I mean, it's a fine line. There are some reports in here about how Barclays and Credit Suisse and some of the other brokers were fined like literally hundreds of millions of dollars for allowing illegal activity on their trading pools by allowing high frequency traders in dark pools, which is totally legal. And these guys, I mean, they're literally making like hundreds of millions, not billions, trillions of dollars off these investment vehicles. And so our goal, right, is to copy what the people that are making trillions of dollars are doing, or billions of dollars. So that's sort of the basis here. And she goes really, really deep in this idea that tons and tons and tons of these guys are doing it, and it's really borderline, legal stuff. So, hopefully this will start to change over time. But, Twitter's kind of on board with it, and these guys at the SEC, these regulators, they've basically said that this needs to happen so that people can have these trades completely filled, right? Like they don't want someone to have half their trade filled, and then the whole thing flies away. And I feel like it's just bad for the marketplace to not be able to have consistent fills, especially with like large position size, right? Because the most wealthy people, like the biggest investors, are the ones that like fuel the entire economy. They're the ones that fuel those investments in the market, and so you kind of have to keep the top satisfied so that everybody else can actually have a market to be in. So kind of just some basic stuff here, which yeah, I mean, just kind of how it works. So cool stuff there, cool basic stuff here. And then she kind of talks about some of the platforms that we're going to start to use to actually look and peer into this data, which is super cool. The data is available through FINRA, but they kind of release everything for about a 2-week delayed basis all the way up to a 1-month delayed basis. So a lot of the data that you can get sort of for free has like really, really, really old history. It's not the best data to use, which is why it's super cool that like brokers will give you free data and you can get free data all over the place. So it's super critical that you actually have access to this data, which we're gonna go into, and you guys will have it. It's super, super cool stuff. And once you have that data, you can actually see, okay, well, where are all these orders coming from? Who's making like all these investments, and then how can you sort of track these and make investments based off of what these big companies are doing, which is super, super, super cool. That's the foundation. That's the premise. That's really the key, the cornerstone of what we're actually going into, which is super, super exciting. So hope you guys get a ton of value from this module. Go out there, apply it, absolutely crush it, and I will see you in the next module. Thank you. Bye.